Hey everyone, welcome back to Corporate Decoder, the place where we peel back the layers of corporate filings to see what is really going on. Today, we're diving into T. Rowe Price Retirement Funds Inc., its latest filing, and let me tell you, it is a deep dive into how your retirement money is being managed, with some numbers that might surprise you. So, what's the big story here? It's all about the Retirement 2035 Fund, and this report gives us a look under the hood at its performance and holdings up to November 2025. It's essentially a financial health checkup for this particular retirement investment. This filing is a semi-annual shareholder report, which means we get a good snapshot of what happened over the last 6 months. Think of it as a progress report on how T. Rowe Price is looking after retirement savings for a specific fund aiming for long-term growth and income. One of the first things investors want to know is about costs. For a $10,000 investment in the investor class of the Retirement 2035 Fund, the costs over the last 6 months were about $31, which works out to 0.58%. Now, the advisor class saw costs of $44 or 0.83%, and the R class had the highest at $57 or 1.08%. The I class, on the other hand, was the most cost-effective at just $22 or 0.41%. Generally, these costs reflect the expense ratios of the different share classes, with the I class being the cheapest, because it is usually for very large investors. Let's look at the overall size of the fund. As of the 30th of November 2025, the Retirement 2035 Fund had a massive total net asset value of over $24 billion. That is a lot of money being managed. The number of portfolio holdings is 31, which suggests this fund is built by investing in other T. Rowe Price funds rather than holding a vast number of individual stocks or bonds directly. This is a fund of funds approach. The portfolio turnover rate was 7.1%. This is actually quite low, especially for a fund that is meant to be a long-term investment. A low turnover rate generally means the fund managers are not buying and selling assets very frequently, which can lead to lower transaction costs and potentially fewer taxable events for investors. Now, let's talk about where the money is actually invested. The fund is primarily invested in equity funds with 54.7% in domestic equity funds and 23.0% in international equity funds. That's over 77% in stocks. Then we have 13.9% in domestic bond funds and 6.5% in international bond funds, making up about 20% in bonds. Trees a small slice of 0.2% in US Treasury debt, and the rest 1.7% is in short-term and other investments. This allocation shows a strong leaning towards growth assets, which is typical for a fund designed for long-term retirement goals. What are the specific investments? The top holdings are all other T. Rowe Price funds. This is key to understanding the fund's strategy. It is an allocation fund that uses other specialists within T. Rowe Price to manage different asset classes. The largest single holding is the T. Rowe Price Value Fund at 12.2%, followed closely by the T. Rowe Price Growth Stock Fund at 12.1%. Other significant holdings include the New Income Fund, the Equity Index 500 Fund, and the US Large Cap Core Fund. This confirms the fund-of-fund structure, aiming for diversification by tapping into various investment styles and market caps across T. Rowe Price's own fund offerings. Looking at the financial highlights, specifically the net asset value per S-share, we can see how the fund has performed. For the investor class, the net asset value per S-share at the end of the period was $24.33. This is up from $21.93 at the beginning of the 6-month period. The total return for the investor class over this 6-month period was 10.94%, which is a solid return. The ratio of net investment income to average net assets for the investor class for the 6 months ended the 30th of November 2025 was 0.61%. This tells us about the income generated by the fund's underlying investments after expenses. Now let's dig into the actual holdings in the portfolio of investments. The bond funds represent about 20.4% of the total. Within that category, the T. Rowe Price New Income Fund is the largest holding at $21.238 in value. Then we have equity funds making up a substantial 77.7%. The T. Rowe Price Value Fund stands out with a value of $29,369.18. And the T. Rowe Price Growth Stock Fund is right behind it at $2,913,097. Under short-term investments, we see 1.7% in money market funds, specifically the T. Rowe Price US Treasury Money Fund, with a value of $406,213. There is also a small portion in US Treasury bills. This section is really interesting because it details transactions with related parties, which in this case are other T. Rowe Price funds. For example, under T. Rowe Price funds, we see net realized gains and losses, as well as changes in net unrealized gains and losses. for funds like the Equity Index 500 Fund, Growth Stock Fund, and Value Fund. This highlights the interconnectedness within T. Rowe Price's investment universe. Looking at the statement of assets and liabilities, the total net assets are once again confirmed at over $24 billion. This statement shows the fund's overall financial position, listing all its assets and liabilities. The statement of operations clearly lays out the fund's income and expenses. For the 6 months ended the 30th of November 2025, the fund had total income of over $141 million, primarily from income distributions from underlying price funds. Expenses were around $61 million, with investment management and administrative expenses being the largest component. This resulted in a net investment income of over $80 million. The fund also saw significant gains from its investments. Net realized gains were over $339 million, and the change in net unrealized gain or loss was a very substantial $2,035,034. This means the fund's investments grew significantly in value. All of this activity led to an increase in net assets from operations of over $2.4 billion for the 6-month period. That is a very healthy increase. The notes section tells us that the fund is a diversified, open-end management investment company and invests in a portfolio of other T. Rowe Price stock and bond funds. It highlights that the fund's allocation among these underlying funds will change over time, becoming more conservative. This is typical for a target date retirement fund like Retirement 2035. Here we learn that the fund is an investment company and follows generally accepted accounting principles in the United States. Investment transactions are recorded on the trade date basis, and income and expenses are on the accrual basis. This note is important for understanding the different share classes. It explains that expenses are charged directly to the class they relate to, and common expenses are allocated based on the net assets of each class. Notice how the advisor class and R class pay Rule 12b-1 fees, which are essentially fees paid to financial intermediaries for distribution and servicing. The investor and I classes do not pay these fees, which is why the I class usually has lower costs. An interesting point here is about in-kind redemptions. This means the fund can distribute shares of the underlying T. Rowe Price funds instead of cash when investors redeem their shares. For financial reporting, this can create gains or losses. In the past 6 months, the fund realized over $169 million in net gain on over $450 million of in-kind redemptions. As expected for a regulated investment company that distributes all its taxable income and gains, no federal income tax provision is usually necessary. Now, let's look at the big picture, Warren Buffett style. What story do these numbers tell us? This fund is essentially a collection of T. Rowe Price's best internal funds. Manage with a glide path that aims to grow your money while gradually reducing risk as you approach retirement. The fact that the net asset value has grown significantly and the total return is strong for the period is a good sign. The low portfolio turnover is also positive for long-term investors. However, the costs can vary significantly between share classes. While the I class offers very low fees, the R class carries a higher expense ratio, likely due to those distribution fees. Investors need to be really aware of which class they are in and why that matters to their long terms. The fund's strategy of investing in other T. Rowe Price Funds is a strength in that it leverages specialized management for each asset class, but it also means any performance issues in those underlying funds directly impact the Retirement 2035 fund. The risk here is that the growth from equities might be tempered by bond performance or vice versa, and the overall allocation needs to be right for the fund's target retirement date. In conclusion, the Retirement 2035 fund appears to be performing well with solid gains and a clear strategy. The main takeaway for investors should be to understand their specific share class and its associated costs. What is your take on this retirement fund's performance and strategy? Are you invested in something similar? Drop your thoughts in the comments below. If this deep dive into corporate filings was helpful, please hit that like button and subscribe for more. And don't forget to check out our Discord community, linked in the description, for more discussions and insights. Thanks for watching, and we'll see you in the next video.